You are under no obligation to pay more tax than you are legally required to. Most tax loopholes are available to everyone, but most people are too lazy to learn how they work. Today, we are breaking down 15 powerful tax strategies used by the wealthy to build generational wealth while keeping the IRS out of their pockets. If you are running into slow connections or restricted access while managing your finances or business tools, you need a reliable connection. I highly recommend using NordVPN to keep your devices secure and your apps running smoothly at all times. You can find the installation link in the description and the pinned comment below. First, consider the Section 121 exclusion. This allows you to exclude up to $500,000 of capital gains from federal taxes when you sell your primary residence, as long as you live there for 2 of the last 5 years. By buying a fixer-upper, living in it while you renovate, and repeating this every few years, you can create millions in tax-free wealth over a decade. Second, hire your kids. You can pay your children a reasonable salary through your business for real work, like filing or social media management. They can earn up to $14,600 a year tax-free. If you then invest that money into a custodial Roth IRA, it grows tax-free for decades, potentially turning into millions by the time they retire. Third, use the Augusta rule. This lets you rent your personal home for up to 14 days a year completely tax-free. If you own a business, you can hold board meetings at your home and charge your business a fair market daily rate. Your business deducts the rent as an expense, and you receive the money personally without paying any income tax on it. Fourth, utilize the Section 199A pass-through deduction. If you own an LLC or partnership, this allows you to take 20% off your business profit before you owe $1 in taxes. If your income exceeds the limits, you can restructure your business into multiple entities, such as separating your equipment, real estate, and management into different companies to keep qualifying. Fifth, use intangible drilling costs to wipe out a massive salary year. If you invest in oil and gas drilling projects, the IRS lets you deduct the vast majority of your investment in the same year, even if no oil is produced. This is a favorite move for high earners facing a large one-time tax bill. Sixth, leverage short-term rentals and cost segregation. If you buy a property and manage it as an Airbnb, a cost segregation specialist can speed up the depreciation of assets like appliances and flooring. These paper losses can often be used to offset your regular day job income, significantly lowering your annual tax burden. Seventh, use donor-advised funds to donate appreciated stock. Instead of selling your stock and paying capital gains tax, donate the actual shares to a fund. You get a tax deduction for the full market value. You never pay capital gains tax, and you can direct the funds to charities at your own pace over many years. Eighth, explore opportunity zones. If you sell an asset, you have 180 days to roll that gain into a qualified opportunity fund. Holding this investment for 10 years allows you to pay zero federal tax on all the appreciation the fund generates. Ninth, leverage qualified small business stock. Holding startup stock for at least 5 years can allow you to exclude up to $10 million of gains from federal taxes upon sale. This limit can be multiplied by stacking your stock across multiple trusts. 10th, master the 1031 real estate exchange. You can sell an investment property and roll the proceeds into a new one without paying capital gains tax. If you keep doing this throughout your life and pass the properties to your heirs, the tax basis is stepped up to the current value, effectively erasing decades of accumulated capital gains. 11th, consider conservation easements. You can buy land with development potential and legally agree never to develop it. The IRS allows you to deduct the difference between the land's potential value and its preserved value as a charitable donation, which can result in massive tax write-offs. 12th, use a self-directed Roth IRA. By putting assets like crypto or pre-IPO shares into a self-directed account, your gains grow tax-free forever. Every sale inside the account is tax-free, and you can access the funds at age 59 and a half. 13th, investigate private placement life insurance. This is a tax wrapper that allows your investments in private equity or real estate to grow tax-deferred. You can then take tax-free loans against the policy to live on, and the death benefit passes to your heirs completely tax-free. 14th, optimize your business expense ladder. As your income grows, shift your lifestyle expenses into business deductions. Your phone, car, travel, and even your staff can be categorized as business costs. This lowers your effective tax rate significantly as you move up the wealth ladder. Finally, the master move is the charitable remainder trust. You move a high-value asset into a trust before selling it to avoid capital gains tax. The trust reinvests the proceeds and pays you an annual income for life. You can then use a portion of that income to fund a life insurance policy in an irrevocable trust, which pays your heirs a tax-free inheritance upon your death. Learn the rules of the game to optimize your financial life, but remember that the goal is to build a life you are actually happy with. Do not downgrade your quality of life just to save on taxes. Subscribe to Tech Vibes for more strategic guides and let us know in the comments which loophole you found the most interesting. Thanks for watching this guide from Tech Vibes. See you in the next one.